Imagine for a second you're running a lemonade stand. You have the best year of your life. I mean, customers are lining up around the block.
Okay.
You sell nearly double the amount of lemonade you sold last year. You're high-fiving everyone. But then, at the end of the day, you look in the cash register and you realize you actually lost money on every single cup.
Right, the costs went through the roof. I can see that happening.
But then, and this is the part that makes no sense, you go home and tell your spouse, honey, we're rich. We made a profit this year. How
Sounds like a riddle. Or some kind of magic trick.
Exactly. How does a business nearly double its sales, lose millions on its operations, and still claim a net profit?
Well, what we're looking at today isn't magic. It's a very specific and very strange cocktail of hyperinflation accounting, real estate valuation, and a shareholder who had to, well, reach into his own pocket to keep the lights on.
Welcome.
Today, we are doing a dedicated look at the 2025 annual report and financial statements of Prisma Matbaacılık, Yayıncılık, Sanayi A.Ş, ticker code PRZMA.
We spent the last few days combing through the Board of Directors' annual activity report and the independent auditor's report. This is for the period ending December 31st, 2025.
And our mission, really, is to decode these dense PDFs for you, the individual retail investor, because let me tell you, the headline numbers here are incredibly misleading if you don't read the footnotes.
That's exactly why we're here, to read the fine print so you don't have to. Let's first get to know the company a little.
Okay.
Because looking at the name Prisma Press, I'm assuming we're talking about a printing press.
You'd be right, but only partially. Prisma Press has some serious history. It was founded way back in 1975 and went public in 2012.
Okay, so 50 years.
Yeah, and their headquarters and factory are in the Ataturk Organized Industrial Zone in Hadimko, Istanbul. It's a pretty substantial facility, about 3,000 square meters open area and 5,000 closed.
So what are they actually churning out in that factory?
The core business is exactly what you'd think. Printing books, magazines, cardboard packaging, paper trading. They describe themselves as being 20% labor, 80% capital intensive, heavy machinery, big presses.
The smell of ink and paper.
That's it. But here's where the story gets weird. They aren't just printers.
I saw this in the report, and I honestly thought I was reading the wrong PDF for a second. They operate a hotel.
They do. It's a complete left turn from their core business. They own this tourism and real estate asset out in Silivri in Selim Pasha. It's a hotel, a restaurant, and a wedding salon.
A wedding salon?
The wedding salon, all on a very valuable plot of land, about 7,801 square meters.
That is such a bizarre mix. A factory floor and a bridal suite, so I assume they have different subsidiaries for these businesses.
That's the other surprise. The report is extremely explicit. It says, İştirakimiz yoktur,
Which means?
0 subsidiaries, no complex corporate web. The printing presses and the wedding venue are all under the same legal roof.
That feels incredibly old school. Just one big pod. Well, speaking of the operation, if they're running a factory and a hotel, they must have a decent number of employees.
You'd think so, but this was one of the starkest numbers in the report. In 2024, the average number of employees was 32.
Okay.
By the end of 2025, that number dropped to just 22.
Yeah, hold on. 22 people total
22.
to run a public company, a factory, and a hotel.
It's incredibly lean. It barely sounds like a corporation listed on the stock exchange. It sounds more like a small family business that happens to have a ticker symbol.
Well, let's talk about the family then. Who owns this thing?
It's heavily concentrated at the top.
Yeah.
The major shareholders are Metin Kuru with about 14.6% and Raşit Kuru with about 12.1%.
Okay, so the Kuru family.
Right. But despite that, the public float is actually very high. About 68.64% of the shares are trading publicly.
That's a lot of retail money riding on a 22-person team. Who's on the board making the decisions?
The board has 5 members. You've got Metin and Raşit Kuru. Then there's Sibel Kubilurku, so 1 female member out of 5 + 2 independent members.
I have to ask about compensation. Usually in these small family-run companies, you see them paying themselves these huge salaries. Do we see that here?
I actually found the opposite, which is really rare. There's a disclosure that bluntly states the board members are paid the minimum wage, Asgari Ücret.
The chairman of the board is on minimum wage. Come on.
That is what the report says. The total short-term benefits to key management for the entire year was only about 492,000 TL.
That's nothing.
In the world of corporate governance, it's peanuts. It suggests the owners aren't trying to strip cash via salary. They're likely betting entirely on the value of their shares.
That creates alignment with shareholders, I suppose. But let's look at the business itself. Is printing a good sector to be in right now?
It's a grind. The report is pretty honest about it. The industry is shifting to digital, margins are razor thin, and it's highly competitive.
So if we had to do a quick SWOT analysis, strengths, weaknesses, what does that look like?
Okay, quick SWOT. Strength is definitely the assets. They own the factory and that prime land in Silivri.
Weakness.
The core printing business. Low margins, high competition, and with only 22 employees, they just don't have scale.
Opportunities.
That Silivri hospitality project, that land and hotel are valued at 308 million TL. That's the hidden gem.
And threats.
The macroeconomy, high inflation. The report literally treats Turkey as a hyperinflationary economy, which just destroys your working capital.
Okay, that sets the stage perfectly. A printing company that's secretly a real estate holding, run by a skeleton crew. Now we can move on to our analysis. Let's get into the numbers.
Right, but before we drop a single figure, we have to talk about the lens we're using. Prisma Press uses inflation accounting, specifically TMS 29.
We hear this term a lot lately. What does it actually mean for us?
It means all the numbers we're about to discuss have been adjusted to show the purchasing power of the lira as of December 31st, 2025.
So it's an apples-to-apples comparison with last year.
Exactly. Without it, the numbers would be meaningless.
Okay, so these are real numbers. Let's start at the top. Revenue.
Revenue looks explosive. In 2024, they did 65.6 million TL. In 2025, that jumped to 110.7 million TL.
That is a massive jump.
Yeah.
That's almost a 69% increase. If I just saw that number, I think this business is absolutely booming.
And this is where the detective work begins. Because while revenue nearly doubled, look at the gross profit. In 2024, gross profit was 9.89 million TL. In 2025, it was 9.78 million TL.
Wait, it went down?
Slightly, yeah. But I mean, it's basically flat.
So let me get this straight. They sold 45 million lira more stuff, but they didn't keep a single extra penny of profit from them.
Exactly. The cost of sales just exploded. It hit 100.9 million TL. The cost of paper, ink, electricity, it rose so fast. It just ate up every single bit of that new revenue. Their margins completely collapsed.
That is painful. And that's before paying the accountants or marketing.
Correct. Once you factor in administrative and marketing expenses, about 12 million TL, the picture gets ugly. The company posted an Esas Faliat Zara, an operating loss of 14.5 million TL.
So the core engine of the company, the actual business, is broken. It lost 14.5 million.
And that's worse than the 11.6 million loss they had the year before. Operationally, this company is bleeding cash.
But, and this brings us back to my intro, they didn't report a loss. They recorded a net profit of 183,716 TL. How do you dig out of a 14 million lira hole?
You don't dig out with shovels, you dig out with calculators. This is the investment activities section. The report shows an investment income of 43.4 million TL.
Where did 43 million come from? Did they sell the hotel?
No, and that's the key. They didn't sell it, they revalued it. The bulk of that income, about 34.8 million TL, comes from the revaluation of their investment properties.
Okay, so the value of the real estate just went up on paper. I want to use a metaphor here. It's like you own a bakery. You lose money on every cross you sell. But because your bakery is in a trendy neighborhood, the value of the building itself doubled. So you tell your investors, hey, we had a profitable year, but you can't pay your flour supplier with building value.
That is the perfect analogy. That is exactly what's happening. The operational cash flow is a disaster, but the balance sheet looks great because the assets are appreciating.
So if the profit is just paper gains, how are they actually paying the bills? They must be burning cash.
They are torching it. The operating cash flow was negative 67.3 million TL.
Negative 67 million.
That means 67 million lira left the building just to keep things running and buy inventory.
But they started the year with only 5 million in cash. They should be bankrupt. How are they still alive?
This is the most critical part of the 2025 story. They survived because of financing activities, a massive inflow of 77.7 million TL.
From bank loan.
No. The banks might have been hesitant given the operating losses. This money came from the vice chairman, Raşit Kuru. Yeah.
The owner.
Yes. In September 2025, he did a private placement capital increase. He bought shares at 14.68 TL, injecting hard cash right into the company.
So he reached into his own pocket and said, I need to save this.
Precisely. That injection is the only reason they ended the year with 9.7 million TL in cash. Without it, the lights would have gone out.
This brings us to the balance sheet. When Raşit Kuru put that money in, it did something weird to the equity section, didn't it? Total equity is huge. 535.7 million TL.
It is a fortress of equity. But you have to understand the parts. When he bought those shares, he paid more than their nominal value. In accounting, that difference is called a share premium.
Pelara Ilishkin Primler.
That's the one. That line item alone is 77.8 million TL.
So that's not money they earned from printing books, that's just money from the shareholder.
Exactly. And then you have all these inflation adjustment differences, which add another 357 million TL. So the high equity isn't retained earnings. It's a mix of shareholder cash and inflation adjustments.
What about debt? Are they drowning in loans?
Surprisingly, no. Their debt ratios are quite healthy. Short-term borrowings are around 90 million. Long-term is negligible. Because that equity number is so high, the company isn't over-leveraged. They're asset-rich.
Asset-rich, but cash-poor. So what's the plan? Are they going to keep printing books and losing money?
Well, management's commentary is definitely shifting focus toward the Salivri hospitality project. And there's a crucial detail here. They mention the Imar Barushan, the zoning amnesty.
Why is that a big deal?
For a long time, properties like this often had, licensing or zoning gray areas. Management explicitly states that this amnesty resolved the operating license issues for the hotel.
So the regulatory handcuffs are off.
Yes. That asset is now fully legitimate and usable, and the auditor knows it. They flagged investment property valuation as a key audit matter.
Because that's where the real value is?
That's where the value is. The Salivri project is sitting there valued at 308 million TL.
Wow. But before we get too excited about the hotel, I have to ask about something I saw on the footnotes. Related party transactions. The name Tandem Yayıncılık kept popping up.
You have a good eye. This is the orange flag for me.
Well, orange, not red.
Because it's not illegal, but it shows a massive dependency. Tandem Yayıncılık is also owned by the Kuru family. Now get this. Prizma sold about 40.8 million TL worth of goods to Tandem.
Okay, so nearly 40% of their revenue comes from a company the owners also own.
But it goes both ways. Prisma also purchased about 55.3 million TL from Tandem.
So more than half their costs are also going to the sister company.
Exactly. It's a closed loop. As a retail investor, that's risky. You have to trust that the pricing is fair. It blurs the lines. Are you investing in Prisma or are you investing in a subsidiary of Tandem?
That is a very uncomfortable question. Okay, let's try to land this plane. How would you summarize Prisma Press to a friend?
I would say Prisma Press is a classic asset-rich, cash-poor story. The printing business is fighting a losing battle against inflation. It creates revenue, but it just consumes cash.
Right.
However, the company is sitting on a gold mine of real estate. They are profitable on paper because those assets are skyrocketing in value, but they're surviving day to day only because the owner is willing to write a check.
It really forces you to ask, what are you actually buying when you buy PRZMA stock?
That's the ultimate question. If you buy this stock, don't fool yourself into thinking you're investing in a growth printing company. You're essentially buying a share in a real estate portfolio that just happens to have some noisy printing presses running in the basement.
A real estate investment trust disguised as a publisher. That's a provocative thought to leave you with.
It certainly changes how you interpret the price-to-earnings ratio when the earnings aren't cash, but just property appreciation.
Absolutely. A fascinating case study. If you enjoyed this deep dive, please like the video and subscribe to the channel. It really helps.
And please share this content with other investors. If you have friends scratching their heads over inflation accounting, send them this link.
Also, please evaluate our membership options. Your support allows us to keep making these videos for you without needing a capital injection from a vice chairman.
And reminding you that you can also show your support with super thanks. Thanks for listening.
See you in the next deep dive.